Okay, so sorry for that. I ran out of data, so I had to buy more data for this Zoom meeting. So yeah, so please do forgive me. So I'll most probably post the two videos because that first video I was doing and that first recording I was doing was cut short. So now this will be like the continuation, finishing off everything else that we've been doing. So yeah. We're still calculating our capital account. We're still on our capital account. Yeah, so I was still talking about how to get our opening balance or opening balance. So we can say all the assets minus our liabilities. For example, let me just try to begin quickly. So we say this well as our vehicle, which is an asset, we're going to say minus 7,000 minus, okay, so plus the equipment is an asset minus our accumulated depreciation, and then plus this plus this plus for fixed deposit, which is also an asset. So inventory is an asset, trade receivables is an asset, fixed deposit is our asset, and then we have trade payables. Trade payables, we all know that it's our liabilities. So we minus our liabilities. So we add all the assets minus all the liabilities. Then we minus also our allowances for credit loss. We also minus our bank overdraft. And then we add our petty cash. Add our petty cash. And then, so our capital, it's our owner's equity. We don't touch that. And then our drawing also owner's equity. We don't touch that. Our profit for the period, that's our profit or loss. So we also don't touch that. And then we have our loan. We have our loan. So our loan is what? Our liability. So we minus our loan. And then we get what? We get the 64990, which is our opening balance. Which is 649. Which is 64990. Another way of getting our opening balance, we can simply say is equal to capital minus drawings plus our profit for the period. Then we say enter, gives us the same amount. So either way, you can choose which method is best for you. So yeah. And then, so what's next? So let me just top that off. So our answer sheet. So we done with our opening balance. Now our drawings. We're looking for our drawings. So we go back to our question and check what they told us concerning our drawings. Okay, so now we have our drawings at the beginning, which is the 41,000. So we're not looking for drawings at the beginning, we're looking for our drawings at the end. So we check it for, okay, so information number 7. Information number 7, they tell us Mr. Lekota draws 2,000 cash every month for his personal use. So every month this person draws out 2,000. So our drawings, so we say it's equals to 2,000. So the person draws that money every month times 12. 12 for 12 months. And then we have our 4,000. So this is supposed to be a negative amount. So let me just bracket that. Bracket 24,000. Then we have that. And then contributions. What are the telling us concerning our contributions? Okay, so we are done with that. So we just highlight that. Okay, so contribution invested. What? Mr. Record invested initial 1,000. Okay, so I think we're done with this. Let me just highlight that. And then trade payables, and then we also left with this. So the no telling us anything concerning contributions. So we say this to 0. So in order to get our calculated balance, we have to say opening balance minus the 24,000 for drawings to get what our calculated balance. So let's do that quickly. So we say this equals to, so let's do 64,990 minus 4,000. And we say enter. And then we have what our 40,990. So we have our 40,990. And then we're moving on. Where are we? So we're looking for our closing balance. So simply, closing balance, in order to get your closing balance, you can simply do what? You can simply say what? Total assets minus your total liabilities. So let's try to get our liabilities quickly. So that we can get our closing closing balance. Yes. So our trade and other payables, let's see what they're telling us concerning our trade and other payables. So the same trade and other payables, trade payable control amounted to 26,300, whilst accrued expense amounted to 217. So they're saying trade payable control amounted to 26,000. So let's do the note quickly. So note quickly for trade and other payables. Trade and other payables. Trade and other payables. So on our trade and other payables, we have what? We have our trade payable control, trade payable control, and then they also told us about our accrued expense. So let's just type that in, accrued expense plus accrued expense. So accrued expense, so meaning expenses that we're still owing, expenses that we must still pay. Yeah, more like your outstanding expense, like those expenses that you're still supposed to pay. So they told us that our trade payable control amounted to 26,300, whilst accrued expenses amounted to 270. And then 270. So let me just double check. Yes. Yeah. So now to get our total trade and other payables, we have to add the two amounts. So that and get the 26,517. 26,517. So our trade and other payables is what? 26,517. Like that. 26,517. Okay. And then we move on. So we have to get our total current liabilities. So total current liabilities is equals to this plus this. Simple ABC. And then our long-term loans, what are they telling us concerning our long-term loans? So we're done with this. Just highlight that. Highlight. Okay. And then we're only left with this. They saying on 1 December 2020, Mr. Lekota repaid 1,000 on the loan from CJK. So how much was the loan? The loan from CJK was 2,500. So we repaid what? 1,000. So this is an easy one. So this is an easy one. So there's no need to do a note for this one because it's easy. So you just already know that in the beginning we had a loan of 2,500 and then we repaid what? 1,000. So what's left is 1,500. So also here our total non-current liabilities is what? 1,500. And then, so now what are we looking for? We're looking for our closing balance. Using it in order to get our opening balance, we said what? Amount at the beginning. We said our total assets minus our total liabilities. So same thing here. We're going to see what? Total assets, but then now we're using the adjusted information. So we're going to use this amount, the one that we've already calculated, this one in green, this amount in green. So we're looking for what? We're looking for our opening balance. So let me just do the calculation somewhere on the side. Yeah. Okay, so I'll do the calculation just somewhere here, and then we'll say it's equals to our total assets minus our liabilities. And then we get what? 86,209. 86,209. Which is our closing. 86,209. 86,209. So this 86,209 is our total owner's equity, which is 86,209. 86,209. And then we're looking for our capital amount and our current account amount. So our capital, you can already see that it's the 40990. 40990. 40990. Like that. And then our current account, it's supposed to be the amount for profit. Which is amount that's supposed to pop up right here. So how do we get our profit for the year? Our profit for the year is equals to this 86,200 minus this calculated balance, which gives us what? 45,290. 45,290. So 45 to 19, just like that, and then yeah. So that's your amount for for your current account. That's your net profit. That's your profit. Oh, yeah, so that's your net profit. And then that's your okay, so now how do we get this? We're going to add the oranges. We're going to add the 86209 plus this plus the 80,817. So we say it's equals to that's the this plus this plus this. Say enter. So you can check the two amounts are the same, which is the two greens are the same. So meaning we did everything correctly. Okay, so I said I will show you the two ways of how to calculate your owner's equity. So now let's try to do it using statement of change in equity. So statement of change in equity. Statement of change. So we know our statement of change in equity that we have what our balance at the beginning, balance at the and then we also have what we have our profit. Let's just say profit for the year for the year. And then we also have drawings. And then we have our balance at the end, balance at the end. And then so we have to add our profit and then we minus our drawings. So we're moving on, and then we say what? So now we have to put in all the balances, all the amounts. So our balance at the beginning, we already know how to calculate our balance at the beginning. I've already showed you how to do that. So let's just take the amount as it is. Balance at the beginning, which is the 64900. 64990. 64990. Already know how to calculate all that. And then our profit for the year also. Same thing. We also know how to calculate that, which we got our profit for the year, which we got 45219. 45219. And then our drawings, we check 24,000, 24 in brackets, 24,000, like that. And then to get our balance at the end, we simply have to say what? We have to see our balance at the beginning plus our profit for the year minus what? Minus our drawings. In order to get what? Our balance at the end, which will be, so let's just even reduce all to sum. The bracket, just and it's supposed to be add and minus, what is supposed to be minus, and let me see. and this is the 8620209. So this amount, that's what you take, and then you put in where? On your bonus equity. Your bonus equity. So I think that's pretty much everything concerning your incomplete record. So that's basically everything. So I hope I was able to explain everything well. And then if ever there's anything you might have missed, you will just go through the video again and then rewatch and see how everything was done. So that's basically your incomplete records. So that's where I'm going to end the video. So next topic I will try to do partnership. So yeah, next time I'll try to do partnership. So yeah, so just please stay tuned. So if ever this video was helpful to you, please do like and subscribe so that you don't miss out on any of the videos that I'll be posting next. So from me to you guys, this is goodbye. So you have a lovely day.